much as before, we are looking to invite people to volunteer suggestions of the markets or indices that you would like Carol to bring up. And then, Carol, if you're okay, just to talk through the analysis of the chart, where it's been, what you think the levels are showing us. So we're starting to get some suggestions coming in. Okay.
Not rude ones, please.
Sorry?
No rude ones.
No rude ones, no. Well, we're looking at, I know the DAX has come up, one of your favorites, of course. Bitcoin, I don't know if we can look at Bitcoin.
I haven't got Bitcoin on my system.
No. Okay, the Dow is being mentioned, FTSE 100, pound cable, and the pound, yeah, pound dollar, and gold. So really all the majors. So let's get started. What are we looking at now?
Well, I'll tell you what's been what I try to do is get people to look at the chart, and yes, we have indicators that can tell you changes of trends, etc., etc. But if you actually can read the chart, you stand a much better chance of being able to get in at really good levels. And the FTSE really does show this. It's very, very clear to me. You can see where we had this reversal day, okay? So there we had the reversal day in June. So at that point, at this exact point, you're thinking, okay, we can't go any higher at the moment. We also at that point hit a weekly trend line. So we were all looking around that 76 area. So when we had that made new high, couldn't sustain it, closed on the low, it's your key, okay, something's wrong with the recent uptrend we've been seeing. And it played out. I mean, it really did. The only little niggle was this bit here, but if you can see, it still didn't break through any significant levels on the top side, and down we came. Now, when we based here, you can see that we came virtually to the 61.8 fib level. Now, the interesting point is, as you've seen the market come down, you've seen it go sideways. It based, it based, it based. So we traded this range. It was really, really a simple range to trade. It was the 73.10 to 73.80 range. We did that for a few days. Happy days. Now, when we broke through this area here, but look what we made here. We made this little bullish flag. Can everybody see that little bullish flag there? Does anybody know what bullish flag is?
I think we're looking at that, yeah.
Okay, so here tells you we're going higher, this bit here, of a good support, held 3 times, up we go. Here, we've got this bullish flag. Now, the measured target on that bullish flag is 75.37. Okay, that's how we get the measured targets. I'll go through on the Dow and the S&P of how we get the measured targets and the fib extensions, but on the FTSE, we're not in our uncharted territory. We have levels to aim for. So this 75.37 area is where the measured target peters out. Now you can see this downtrend line here coming in today, and we come in around the 75.05 area. Okay, see that there. So you're going to get sellers coming in at that higher level. You're going to see people take profits again at that higher level, but they will be buying if we can break through 75.10 for 75.37. And overall, there really is no reason at this moment why we cannot go and challenge those 7,600 highs. Yes, we're overbought. We've been overbought for quite a while, but look at the weekly. We're not overbought at all. In fact, we're bouncing off of oversold levels. Now, if you look at this, okay, this upward trend, I mean, I can go on about it's been in an uptrend since 2009, but we have been in an uptrend now for over a year. Okay, June last year we started, and this is where we've gone straight in that uptrend. So we've stayed within quite a good channel. So when you combine the weekly channel with the 61.8 and the basin of 3 times and scoop it out to your 4-hourly chart, you can see these patterns really come up very, very often, and see the way it bounced off that line there. I mean, it went to the level, it actually bounced to the exact level, and up we've screamed. So around here we're going to see profit taking, but I can't see any reason why the FTSE still shouldn't trade higher. Does anybody have any questions on what I've just said?
Fantastic, thank you. Anybody else? Does anybody have any other opinions on the FTSE? Might be interesting as well.
Yeah, I mean, I'm open to anything. I don't use an awful lot of indicators, I have to say, because I find that doing this for so many years, they didn't have all the indicators back then, so you had to be a pure chartist. Do you see what I mean? So I'm always looking for the charts to tell me where it's going, not so much the indicators. They will get, I mean, the indicators here would say buy a break above 73.90, but frankly, once it did this, you can get in so much easier and at much better level. So you can, using charts, you can preempt the move, which I find extremely profitable. You can also preempt that it's going to go in the direction you think it's going to go, but also, most importantly, you know where your stops are, because if it starts to break down, you're out, and so your risk is very limited on trades like this. If you pick out chart points, you know very, very quickly where you're wrong, and I find that it is much better than waiting until it does break. Because if you'd have waited till it broke above here, you know, you had to wear this pain down here. Do you see what I mean? So you're wasting valuable points. But if you look at what it did, it still remained within the bullishness of what it created down here, just above that 61.8 fib level. So you can look to cover your half at a chart level, go back in if it doesn't go back below certain points. And if you look at how that little bullish flag unfolded, you can now see the reason why we went screaming up the last 2 days. It was expected, shall we say.
So essentially we're looking at FTSE up, pound down, says Gordon.
Yeah, you are. I mean, if you look at the pound, you know, we had a long-term target of 31.45. We hit 31.50, well, 31.30. Now, from 121, that ain't a bad target, I don't think. So you are getting the institutions and the hedge funds. Don't forget, they're all looking at the same thing. You know, they're all looking at charts. You know, whatever they say, but please believe me, they do look at charts. So you're going to see the pound come off from those higher levels, because that has been the 6-month target of it. All right, we were 15 pips off of it, but 10 big figures went in its favour. So sterling is under pressure at the moment. Personally, I don't see it going that much lower, but I can, and don't forget, it isn't always, please do not think about these correlations, these change. So it isn't so much FTSE up, sterling down, because I've seen them move both together the same way, both up, both down, you know, then one moves on its own. They do sometimes come back into line, but it hasn't always been the case that FTSE up, cable down. It does change.
Indeed. Milo says he's still surprised the FTSE went that high in the first place. Joe says, doesn't it need to break the downtrend line at 7,500?
It does. It does need to break that line at 7,500. Of course it does. But, you know, markets overextend. So 75.37 isn't that much higher, which is the measured target. And, of course, once it breaks that 7,500, then it's got 75.37, then 7,600. So waiting, look, if you're waiting until that breaks, you've missed 150 points. See what I mean? And at the point where you would want to be buying it, you're only looking at 37. So if you buy it at 75.06, looking for 37, because it will come under pressure at that 37, you're not making the most of what the FTSE has been telling us for the last few weeks. You've got to be in front of the market as opposed to being behind it. You know, this is where I think the retail market struggles a bit, because they are all looking at that downtrend line and will all pile in above 7,500, and the smart money is going to go sold, and they're going to squeeze you out, even though the trend should still be higher. And that's what you've got to be very, very careful of. You don't want to keep getting squeezed out. So if you're waiting for a break and you think it's going higher, buy it. You know, buy it when it does a specific thing. Here you've got, I mean, our stop down here was below 72.80, so you were risking 20 points to make, well, we're still in it, so, you know, to make as much as 7,500, 75.37. So don't be scared of it, and don't be a little Johnny come lately. That's the problem I find that most retail traders have. You look at the indicators as well. You know, up here we're entering overbought, so above here you're going to see people coming in and start to sell it. Now, whether they sell it all the way back down here, I don't think they will. But if you're buying here, you really leave yourself open to being squeezed out of the trade, and that's something you shouldn't happen. You shouldn't be worried about being squeezed out of a trade if you get in at the correct levels. And it is all about levels, really, seriously.
Wayne says, how did you get the target off the bullish flag again? Can you...
I measured it. So what I did is I take this high here. Okay, so I'll just go through it with you. You take this high here, which is 74.39. Okay, so you just put that 74.39, and then you take away the low, okay, which is 73.29, gives you 110 points, and you add that onto the little breakout here. So that would be 74.10 plus, gives you 75.37.
Simple.
It is, honestly, the way, I mean, it really is. It's the most simplest thing to learn. If you're learning about indicators, my God, you've got 400 studies. But if you just learn the basic things about charts, you'll get there a lot quicker. For example, you can measure this. You can either measure top to bottom, sideways to side to side, and you get that range, if you like, and you then project that up. And I just do it. I just measure that, up it goes. That again gives me 75.27. So it's all in that area. Do you see what I mean? But these are very basic charting projected targets that really, if you're going into this business, you should learn these very, very quickly.
What about the pound dollar cable? Can we have a look at that?
We can. Okay. Now, the first thing you see on this is you've had a key reversal day. Okay. If you look at the weekly chart, you can see where we got the target. Can you see that? 38.2. Now, people say to me, oh, what's that there? That didn't happen. The low was 119.60. Okay, so we double based in cable. So I've just took that from where Brexit was down to that low. The 38.2 came in at 131.45, as you can see. Can you all see that? So when we started to bounce off 121, that was our target. But most importantly, this was our target. Markets do correct. Okay. Now, if we are to remain in the downtrend, which looking from 2014, we're in a downtrend in cable. There's no, it isn't just Brexit. We're way off base to what we was in 2014. We was up at 175 in 2014. Brexit, we got like to 150. And, you know, sterling's been a lot lower. We've been to 103 back in 1985. So anyway, bear this in mind. Markets correct, and normally if we're still within a downtrend, they will correct back to 38.2. Now this has done that. It's corrected back to the 38.2. So there you can see that quite clearly on the daily, on the weekly chart. Look at the daily chart. You can see that key day reversal. Can everybody see that? Does everybody know what a key day reversal is?
It might be worth reiterating, Carol, if you can.
I can. A key day reversal is a higher high, a lower low, and a close below the previous day's low. Now, obviously, that works the reverse if you've got a key day reversal on the downside. But this was a key day reversal on the top side, coupled with the fact that it had reached near enough its yearly target. It had no option but to fall. Okay. This also, if you look at what our indicators were doing, I'm going to take that one off because I don't use that. What our indicators were doing, as we went higher, these didn't. So we had three reasons why sterling cable wasn't going higher. We had the fact that it hit target. We had the fact that it made a key day reversal. But what alerted us to begin with was this divergence. Okay. And divergence is when the price goes higher but the indicators don't. And we had divergence on the stochastics, which is quite an important indicator. So this tells us, hold the bus, something's up with this market, we're not going any higher. And no one's going to wait until it reaches exactly 131.45. You know, these hedge funds, these institutions, they don't do that. Above 131, they're unloading. They are unloading. I heard, well, now we're going to 135, somebody told me the other day. And I'm like, well, maybe, but not yet. We've got to come lower first because everything is pointing to the fact that this is coming lower. And this is probably where we're going to come back to, which is around the 127.20 area. Okay, then we look again. We have to look again. So 127.20, 126.90, that's quite a good support area. But if this correction that we've seen since last year is true, then sterling won't hold that and it will come a lot lower. And we've also got divergence on the weekly charts as well, which confirms. So,
okay.
And this is just purely looking at charts and how they, understanding the psychology of the market and the psychology of charts, because all a chart is basically is supply and demand. You know, you can see just by looking at it what it wants to do. Does it want to go up? Does it want to go down? Is it bullish, bearish, blah, 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 blah. These charts actually tell you it. You don't need lots and lots of indicators because that is only going to confuse you. You need to be aware of where the real money is trading these markets. I mean, if you can grasp that and grasp the psychology of that, you are 90% there.
Just before we move off cable, Graham asks if you can explain the divergence on the weekly.
Sure. It's the same as on the daily. What happens is the market makes a new high and these don't, and these start to turn lower. So this tells you on the weekly chart it's a very, very significant signal that this is not going to go higher at the moment. So divergence is divergence. Doesn't matter what time frame you're looking at. I mean, obviously, the longer term you look at, the more important the divergence is. You know, if the weekly charts are diverging and the daily ones aren't, I always keep my eye on it very, very closely, because the weeklies are quite important. Well, they're very important. They're one of the most important chart time frames you can look at.
Okay, just keeping an eye on the time here. Let's go, if we can, have a look at the Euro, Japanese yen, Euro yen.
This is something I don't trade, I have to say.
Okay.
Okay. Only because I've got a bit of a love-hate relationship with the yen. That's all. Working for a Japanese bank for 4 years really did put me off the dollar yen. However, if you look at this euro yen, let's just grab a little segment over here. There you go. Let's have a look at the daily. Right. So we look at the weekly. What way are we going? Delete that. Okay. So ever since here, we've broken up and up and up and up. We haven't quite reached this point here. If I look at this, so on the weekly, still looks quite okay, but we're beginning to turn lower. Can you see that on the indicators? We have diverged slightly, not much, slightly, but still diverged. If you look at the daily, it does look like it's going to come down even further. Not too much, because we're still pointing lower on here, but beginning to sort of go into neutral oversold area. But I can see that coming back to at least 126. See these two tops here. So when markets retrace, they do retrace to a Fibonacci level, but they can also retrace, obviously, to previous highs, because a previous resistance now will become support. That was quite a good double top. It didn't play out, but it will now act as support. And you've got that line coming in here at 125.90, 126.10. So you've got that double top coming in at 125.80. So anything in this area is where euro yen should go. Can you see that little topping pattern there?
Yes.
There you go. Little tiny shoulder topping pattern, which would give that a measured target. If I do that, I'm going to...
Okay. General question from Gordon for you, Carol. What timescales do you normally look for entering a trade on? What sort of timescales do you trade?
Well, you always look at the weekly chart. I don't trade off of a weekly chart. You always look at a weekly chart. Me, personally, it'll be the daily and the 4 hourly.
Okay, so pretty short.
You can look at an hourly chart, but do you know what? You're not going to get the direction, if you like. You're more scalping if you go into an hourly. If you look at the daily and the 4 hourly chart, you can see, I mean, if you can see that quite clearly, that you've got that topping pattern. So all that 4 hourly does is just give you more levels than the daily. It gives you a bigger time frame. I like the 4 hourly chart. I think it's quite an accurate little chart. So I sort of try and combine the 4 hourly with the daily, but I know where the weeklies are, if you see what I mean. Every Sunday I go through the weekly charts and write everything down. And
Okay.
so
Is that the broker?
no, it's right, it's my phone going, I've just stopped it.
Okay, just another couple of minutes. Any final? I think we just wanted to have a quick look at the gold chart Carol, if we could, and then we could let you go.
Simon. Hello. Hello. Do you know what? Didn't you like Spanish salespeople?
Yes.
Answer.
They know when you're on a webinar. They know just the time to call.
If I hadn't have shut them up, they would have... If I hadn't have shut them up, bless them, they would still be wittering on.
Okay.
Right. Okay, gold.
Let's
if you want
have a quick look at gold, if we can. So that we covered the major ones then.
Right, with gold, we're beginning to be a little bit overbought, but look, again, these charts do tell you, you see at this point here, right, when you get this type of bar or candle where it makes a new low and closes at the high, you have a warning signals will come out and go bang. You know, at that point, that's not going any lower. So know your levels as well, because when that did do this particular day, and you know, when it did break through to the downside, and you just know in your head, 1204 is a big level in gold. Hit it, closed higher, we're going up. Where's the next level we go to? We've got 33, we have 45, we have 52, 63. At the moment, there's nothing to suggest gold is going to come lower. But you've got to look around this area here, because we know this has been a stumbling block in the past. So as gold has come up from 1204, big level, and we've made that double top in gold, you can't ignore that. Okay, so this area here I think is going to prove quite difficult to break, and with the stochastics and the RSI beginning to be overbought, I mean you've got 92% overbought on gold on the stochastics. You know, they can't keep going higher, so you know that 53 area is going to prove to be a problem. So you start getting out of your positions at around 49, 50, 51. You know, wait for the pullback. If we hold 24, these will correct down lower. You buy it again, you go in and you buy it again. But you have to be aware of these chart patterns that form, because they're the ones that are going to tell you what direction you're going in. You know, until this day, that day there, I was hearing, well, we're going back to, I don't know, 1120. Well, we may well be, but at that point there, when it bounced off of 1204 and it was really oversold, it didn't have the legs or the psychology, if you like, to go any lower. So there are other things that you look for as opposed to indicators. There are chart patterns that will tell you what the market is thinking, and that's what you need to learn. You need to know what the market is thinking. Once you master that, then you should be fine.
Okay. One final look at the Dow, Carol, if that's possible.
Dow's a little peach, yes. Very difficult when I'm sharing the screen. It seems to have a little mind of its own. Now, Dow, importantly, has not broke its all-time high. Its all-time high is 21,681. Okay? At the moment, it hasn't broken that. The S&P has broken. Nothing else is broken. Right? It's only the S&P has broken up. Everything else trading, you know, within its parameters, within the previous highs or lows. So I think if you look at the daily chart here, you can see that it's beginning to like run out of steam a little bit. But as long as it bumbles along above 75%, and I know that seems overbought to people, but what you've got to understand is if a market is in an uptrend, you're always going to have higher indicators than if it's in a sideways or not doing anything trend. You know, if it's doing nothing, these indicators do show sometimes false signals, but at the moment it's in an uptrend, so you're going to have quite high indicators. And what you will see is if the market falls, the indicators will fall very, very, very quickly, and then the market price won't go down that much, but the indicators will turn. And that's your key, that the market is still well within its uptrend. Same as what we had here. It came down, didn't really do much on the downside, stayed above 20%, went sideways, didn't do much, up we go again. So it's becoming a little bit overbought. But unless we break that 21,861, we will actually come down.
Fantastic. Just here's a question. Richard says, are the charts showing 12 a.m. to 11:59 BST rather than the New York close to New York close?
Well, the Dow is obviously when New York opens, because I only track the actual session. I don't track spread bettors or the futures. So my charts will reflect when the Dow is open. That's it. As with the S&P, as with all the stock markets that I look at, I never track it. On the currencies, it's 12 till 12.